One of the most scary moments in the market for the beginner trader and sometimes the experienced trader is when they encounter long-wicked candles on the chart. From my years of interacting with traders, I realize that the most worrisome situations or moments in the market for the trader is when they find candle wicks splashing all over the place on their chart. Unknown to these traders that the candle wicks are a trader's best friend. The reason is simple. Price moves primarily because of liquidity, and the simplest explanation of liquidity on the chart is the candle wicks. So if a trader is able to get the psychology of candle wicks very well, then the sky will be his or her limit. So in this episode, we are going to look at that important topic of candlestick liquidity. There are two types of liquidity in the market. There is the structural liquidity and there is the candle by candle liquidity. Now, if you can understand the candle by candle liquidity, you'll become a master in this game. There are three ways that you can use the candlestick wicks to determine the next move of price in the market. But before we get to these three ways, let me first off tell you how the candles are formed. Now take a look at these two candles on the chart. Let's look at the first one. As you can see, this candle is a bullish candle that has left this long wick. Now remember, this candle started below and started moving higher until it moves to this point, and then all of a sudden the candle started retracing until it got to this point. Okay, now think about it. What actually happened there? Because you must understand the A-shaped candlestick and the V-shaped candlestick, and I'm going to explain that to you now. Once you can understand the psychology behind the A-shaped candlestick and the V-shaped candlestick, then you are good to go in the market. What is the A-shaped candlestick? I'm talking about something like this, and I'm going to show you that very soon. I'm talking about something like this. That's what I call A-shaped candlestick. The same thing with the V-shaped candlestick. I'm talking about something like this. Okay? And I'm going to show you all of that very soon. I'll explain. Now, how does the candle form? Look at this bullish candle. Now, the first thing that happened here is price move higher, such as this. Can you see that? It moved higher. So it was a complete bullish candle. And all of a sudden, what happened next is this. Can you see what I mean? So the bulls were strong to push price to this high, and then all of a sudden the bears jumped in and pushed price equal to the size of where the bulls got to. Okay, it retraced to this point. Take a look at it, and after it retraced to that point, it left something. It left this candle wick here. So your A pattern is simply from this low now, from this, it went higher and then came back down to that same point. So that is what I mean by the A pattern of the candlestick. Now, this candlestick indicates something in the market. This candlestick that you're seeing here is speaking a language. And as a trader, if you don't understand the language of this particular candle, then you will be a failure in the market. And that's why you need to pay very serious attention. I know some of us will be looking for strategies But this is the greatest strategy that you can ever talk of, because while taking your trades, you need to see candlestick formations around the zone you want to take your trade. Okay? If you don't understand these candlesticks, what they are saying, by the time you want to take a trade, you'll be using the wrong candlesticks to enter, and then your money will go. So the same issue with the bearish candle. It was a bearish candle all the way until it retraced. And the exact same thing that happened on the bullish candle also happened here. And I'm not going to waste your time concerning that. And therefore, what you have is that from here, you have the candle coming all the way back down here, such as this, okay, to this low, and then went back higher to this low. That is the V shape of this candlestick that I'm talking about, as you can see. Okay, that's the V shape. So once you understand how the candles are formed, then you will be good to go in the market. Now I'm going to show you the 3 ways by which you can use the candle wicks to determine the next move of price in the market. Now, these are the 3 ways that you can identify or determine the next move of price on the chart. Unfortunately, a lot of people believe that price moves randomly on the chart. No, it doesn't move randomly. It moves as pre-planned by the market makers. And it is the candle wicks that will tell you what the smart money is about to do next. Now, take a look at this first diagram. As you can see, price printed this bullish candle. Remember, initially, this bullish candle went all the way to this point, a full-bodied candle, before retracing to this point. Now, look at the percentage of retracement compared to the body of the candle. So you find out that the body of the candle is greater than the wick, meaning that the bulls were very much present in this candle. It shows to you that when the next candle opens, it's likely that it's also going to be a bullish candle, because the bulls will still be in control. At least going by this candle, we can tell that the bulls are in control. The bears tried to push price down, but the bulls were too strong that the bears couldn't go beyond this point. Okay? The same thing with this bearish candle. The bears pushed price all the way down here, and then the bulls jumped in and tried to push price higher, but they lost their steam. They could not overpower the sellers, and so at the end of the day, they were able to push a bit and close there. This shows to you that the sellers are still in total control of the market. So we are expecting the next candle to print a bearish candle, because the sellers are in total control. So if you find this at, for example, let me show you your inducement level, such as this. Please follow me carefully. Just follow me carefully. You find this at your inducement level like this. Like this. Okay? So meaning that price has taken out inducement here. It took out inducement there with a candle wick. Think about it. If it took it out with a candle wick, are you going to enter this market going short? Think about it. Are you really going to enter the market going short? If because it took it out right here with a candle wick, are you going to short this market from here? Think about it. Will you go short? No. That will be a wrong way to trade. Why? Because this candle is telling you that the bulls are in total control. So it's most likely that the next candle will continue to go higher and even closed above the high of this candle. Why? Because the bulls are in total control. I need you to understand that. The same thing with the bearish condition. The same thing. Let us assume the bearish condition at your okay, so you find this zone being taken out by a candle wick. Now, are you going to say that price is going to go higher? No. Why? Because look at this candle. The sellers are in total control. The buyers did not have the muscle to push price beyond this point. The sellers are still in control. It's likely that the next candle will continue to go down. So if you see this kind of thing at your inducement level and you set it as swept liquidity and you want to enter to go long, you'll be taken out of the market. I want you to understand this very, very, very well. This is crucial for you to understand. Okay? So now, whenever you find this kind of scenario at specific areas on your chart, it could be, for example, it could even be higher time frame. It could even be higher time frame area of interest, such as this. Now, if it is your higher time frame area of interest, you need to wait. You really need to wait for a confirmation before you can take your trade. Why? This bullish candle here is a strong candle. The buyers are in total control. It's likely that price will continue to push up and then takes you out. All right? At this, your so-called higher time frame zone. So that is why understanding the wicks of the candle is very crucial when you are talking about smart money concept. Now, let's move to the second diagram. Take a look at this second diagram. As you can see, this is a bullish candle. Look at the size of this candle wick and look at the body of this candle wick. They are equal or relatively equal. Okay? When the body and the wick are at equilibrium, equal, what does it tell you? Well, it simply tells you that the market is in a state of equilibrium. The buyers and the sellers are at equilibrium. Okay? And so the buyers are 50%, sellers 50%. So meaning that you cannot tell who is going to carry the day, because as it is, the strength of the buyers and the strength of the sellers is equal. Okay? This is the way for you to be able to read the candlesticks using the wicks to be able to determine the next move of the market. So once you find this kind of candlestick, maybe at your inducement level, like I said, like this, you need to be careful. So when you say that price has swept liquidity here, when you say price has swept liquidity here, and therefore because it has swept liquidity, so price is most likely to use this zone, okay, to start going short. No, that's not the way it works. That's not the way it works. Now you need to wait for further confirmation in this case. Why is it? It is because both the buyers and the sellers are at equilibrium. We don't know who is going to take the day at the end of the day. All right, so we are going to wait to see a proper confirmation. What kind of confirmation will you need here? Well, the confirmation is that if you can find another candle like this coming down to close below the low of this very candle, clearly like that, that's the confirmation you will need. Please take note of this. This is very crucial. Now, let's move to the third diagram. Now, look at the wick of this candle and the body of the candle. You can notice clearly that the wick of this candle is far greater than the body of the candle, meaning that the bulls were in charge. They were carrying price. They took price all the way high here, and then the sellers jump in and then push price push price until they got to a point like this. Look at the distance between this high to this point and compare the distance between here and here. Okay, this distance that the sellers covered is significant. Look at the bulls were not able to be strong enough to stop the sellers. So it was when they battle and battle and battle before they could stop the sellers right here. With this long wick with a small body. What do you think? Well, this is what is called inverted hammer, or if you like, the shooting star. All right, that shows to you that the bears are in control. They are in total control. Forget about the fact that the bulls close bullish at the end of the day, but the sellers are in total control. So if you find this type of candle at your higher time frame zone, you should immediately know that price is most likely to start going lower because the sellers are in total control. Okay, so you can actually take your trade directly from here, but if you are not confident enough to take your trade from there, then you can wait for confirmation. And I will advise a beginner trader to wait for confirmation. And what is the confirmation you need? Well, the confirmation you need will be for you to wait for a candle to close below this low, okay, that's the confirmation you need if you are not comfortable taking the trade directly from here. But if you are an experienced trader, then you can take the trade directly from here and your stop loss will just be above here. Easy, just easy. Okay, or let's assume you have your price is doing something like this. Okay, price is doing something like this. So it took out inducement. How did it take out the inducement? With this large candle wick. Look, that should tell you that price is most likely to open here and start going down. That's the way for you to look at these candlestick wicks and then know what to do next. I'm going to take you to the live chart and show you some examples of what I'm talking about so that you can be able to understand exactly what we are saying. Let's get to the live chart and let me show you some examples. This is Euro USD 1H time frame. Look at this. Look at this candle. Now we had this massive bullish candle going up, followed by another massive bullish candle going up. And after then, we had price moving higher. Okay? So actually, there was one bullish candle, two, and then three here. And before you know it, the sellers jumped in, continuing to push price down. That at the end of the day, it closed here as a bearish candle. Can you see that? So look at the size of this candle wick and look at the size of this candle body. Forget about the fact that these ones are here. If you didn't have the hindsight of understanding that these ones were here, what would be your decision on this candle that you are seeing here? Your decision will be to sell. Why? Because the sellers overpowered the buyers here, pushed price, and then converted it to bearish candle at the end of the day and closed bearish. So this will be my position. And so therefore, if you want to buy this market, all you need to do is to mark it from this low. I mean, if you want to sell this market, not buy, just at this low. Remember, bullish candle opens above and closes below. So put your stop loss just above there, and then you take your trade. But remember, you can also go down, because this will not give you a good risk to reward, but you can go down to the lower time frame and refine this zone. Okay, you refine this zone to go short, and as you can see, the next candle came and tapped into it and went short. And even when you look at this next one, this next candle, look at it. This next candle, look at the size of the wick and the size of the body. Clearly, the size of the body is greater, because when this candle opened here, the bulls tried to push price higher. They wanted to resume their strength here, but the sellers were stronger than them. They pushed them down and closed bearish. This alone will tell you again that price will continue to go down. And as you can see, price went down. Now, take a look at this one, this candle. Is it not different? Look at the size of the candle wick and the body of the candle. What can you say? The size of this candle wick is greater. So what it means is that the sellers were in total control before to this point. All of a sudden, the buyers jumped in and pushed price. At the end of the day, they were able to overpower the sellers. Okay? They overpowered the sellers. Look at the size of the wick compared to the body. The buyers are in total control. With this alone, let's assume we didn't see any of this. With this alone, that should tell you that the buyers have taken over from the sellers at this point. And you should be expecting that the next candle will be bullish candle, will be going higher. And that's why you find this happening. Do you understand? Let's look at the wicks again. Let's continue to look at the wicks. Even with this candle now, this bullish candle, look at it. The size of this candle wick and the size of the candle body, which one is greater? This is far, far greater. This is a strong bullish presence. And that's why you see price continue to go higher. Okay? You need to understand this very well. Now, this one, look at the size of the candle wick above, the size of the candle wick below, compared to the size of the body. The body is clearly telling you that the sellers are present here. They are in charge. Why? Look, price was going higher, and then the bulls continue higher, and then all of a sudden the bears jump in, push price lower, and then came down to this point, and then the buyers woke up again and jumped into the market to push price higher, but they were not able to go beyond this point. At the end of the day, the sellers closed with this bearish presence, strong bearish presence compared to the wick below, wick above. This should tell you that price will continue to go down. All right? Now, take a look at this one. Look at this candle, this one. Look at the size of the candle wick compared to the body of the candle wick. Remember, when price closed in the previous candle, price closed here and opened, it went down. It wanted to continue with this bearish movement, but it was not able. So the buyers jumped in, pushed price, and they pushed price to this high. The buyers pushed price to this high, and then the sellers jumped in again and struggled with the buyers, pushed price lower, and at the end of the day, look at the close. Although they managed to close bullish, but look at the tiny body candle that they closed with compared to the distance that the sellers covered from this high to this point. Look at it. So the next candle should tell you that the sellers will be in charge. Okay? But what happened here was that when candle closed here and the next candle opened, the bulls pushed price higher. And when they pushed price higher, the sellers jumped in again because they were still in charge and pushed price all the way back down here. And then the buyers jumped in again, pushed price to this low, and at the end of the day, look at the way it closed. It closed bearish. That tells you that the sellers are in charge, and that's why price continued to go down. You need to know how to use the wicks to determine the next move of price. Look at this now. This is a hammer. Look, the bears were coming down to this point, and the bulls jump in to push price. And at the end of the day, the bulls, even though the bears managed to close bearish, but the bulls covered more ground than the bears. And that is why you know that there is the presence of the buyers here, and that the next move will be for price to go higher. Simple. Please understand how to use this candle wicks. Very, very simple. Look at this one now. Look at the massive wick. Compare this wick to this candle body. Remember, initially, the buyers were in charge to this point. And then all of a sudden, the sellers jumped in and pushed price to this point. Look at the size of this candle wick compared to the body, which is greater. Of course, the candle wick is greater. That tells you that the sellers are in charge. Even though the buyers closed as bullish, the sellers are in charge. And that's why the next candle went down massively. Can you see that? So this is the way for you to use this for your SMC. We can go on and on and on, and you'll find it everywhere on the chart. The candle wicks tell you a story. Look at this massive candle wick here. Massive. This one. Look at the size of this candle wick compared to the body. You clearly notice that the wick is greater than the body. And what does that tell you? That tells you that price will start going down. At least it will go down to the level of breaking this low. And that is what happened here. Can you see the price? Even though it looked as if it was ranging, but eventually went down. Can you see that? So that is the way for you to know how to use these candlesticks for to your advantage. Look at this one again. You can see it everywhere. Look at the size of this candle wick compared to the body, which is greater. Is the candle wick. Remember, the bears were in control. The buyers jumped in and pushed price, and at the end of the day, they closed bullish. Look at the size of this candle wick compared to the body, which is greater. The candle wick. So the buyers are in charge here. They're in control. And that's why you see price going higher. Can you see that? Price went higher. Everywhere you will find it that way. Now look at this one again. Look at this candle and compare the wick to this candle body. Let's assume we didn't see all of this. What do you think would have happened? The bulls were in charge before. They pushed price to this point. I'm talking about the buyers now. Now the sellers jumped in and pushed price until this point. And the bulls came in and again, pushed price. They couldn't push it higher than this. Okay? Now, who do you think is in charge using this candle? Forget about this. Let's assume we didn't see all of this. Who do you think is in charge? It's the sellers that are in charge. And that's why you see price dropping. So you can incorporate this into that your strategy, and then you become a better trader. So look at this one. The sellers pushed price to this point, and the buyers jumped in and pushed price. And then at the end of the day, they closed bullish. This is hammer. And you should know, because the buyers have presence in this candle. The buyers have full presence in this candle. You should know that we want to go higher. So that's the way to know this thing. Look at this one. The bulls push price to this point. Look at the size of this candle wick compared to this body. Even though they closed bullish, even though the buyers closed bullish, but look at the size of this candle wick compared to this body, which is greater. The candle wick, which is the sellers. And that's why you see price move down. Okay? So you can actually be using these candle wicks to determine your retracement. You can be able to know when is price going to retrace or reverse. You can use this strategy, this candlestick liquidity, to be able to know that. All right? Well, I hope you understand what I'm trying to say. This is what we do every day at RALLYTOP. We only check the candle wicks. We work with the candle wicks closely, because the candle wicks tell us where the liquidity had been absorbed. And therefore, because we trade with structure and liquidity, so we will always find trades in the market at every given time. I hope you understand what I'm trying to say. Now, if you are new to our channel, please, at this point, I would like you to give us your subscription and turn on the notification, so that anytime we publish a new video, you'll be notified about it. And if you want to join our VIP community to learn more, the doors are open for you. Please, if you haven't joined our free Telegram channel, do so just immediately. It is completely free. I'm going to leave all of the links in the description. Alright guys, I want you to go practice on these things, and then you'll be amazed at what you will see. Just using the candle wicks to your advantage, irrespective of any strategy that you are using. You can incorporate what I'm talking to you about in this video into that your strategy, and you'll become a better trader. Alright guys, this is where we draw the curtain. I see you in our next episode.